पहले आप पीपीटी ओपन करो
हाँ, एक मिनट कर रहा हूँ,
और
वही कर रहा हूँ।
उसको मिनिमाइज करो
ओके
और मिनिमाइज करने के बाद फिर स्क्रीन शेयर करो।
ओके।
पीपीटी खोला आपने?
हाँ, खोल दिया, बस कर ही
हाँ,
रहा हूँ।
अभी मिनिमाइज करो।
हाँ, एक ही सेकंड है। 10 सेकंड खाली।
Ganesh, you also keep Bhadresh this one with you, PPT ready in case.
पहले आप कर लो अंशुल जी, पहले आप कर लो ऐसा।
ओके सर, ओके।
चलो, हो गया, मेरा आ गया।
हाँ, नहीं अभी अंशुल का गया।
कोई बात
हाँ।
नहीं, आफ्टर अंशुल।
ये एक स्क्रीन शेयरिंग का ये नाटक रहता है। Sometimes
Is it
you cannot
is
use
it
it.
is it visible to everyone?
Yes,
यस
Okay, perfect.
fine.
Okay,
Yes.
perfect. Thank you, sir.
अभी भद्रेश
यस, मैं कर रहा हूँ, अभी मैं कर रहा
अभी
हूँ।
हाँ
Sir, Pankaj sir,
Yes.
it's better that one of you introduce the speakers. That goes well. That's what I wanted to tell, if it's okay with you.
Yeah, I'll be introducing, don't worry.
हाँ, that's
कल हमने
important.
वो डिस्कस कर लिया था।
No, sir.
भद्रेश अभी आया, अभी फुल स्लाइड कर।
हाँ, कर रहा हूँ।
अनिल जी, कैसा है कि खाली आप आपका
आ गया?
स्लाइड शेयर करिए, इंट्रोडक्शन
Yes.
डॉक्टर पंकज सर दे दीजिए।
हाँ, मैं स्लाइड
Okay.
शेयर करूंगा।
Got it, sir.
हाँ,
Got
हाँ,
it.
बस
sir.
आपका इंट्रोडक्शन
फुल
का
साइज
स्लाइड
करो,
आप
फुल स्क्रीन
अपलोड-
करो, फुल स्क्रीन।
फुल स्क्रीन।
Right, sir.
हाँ, अभी उसको मिनिमाइज करके रखो भद्रेश।
ओके।
इसको मिनिमाइज करो।
हाँ।
नहीं, फर्स्ट स्लाइड पर जाओ
ओके
और मिनिमाइज करो।
ओके।
और अभी जब बोलूंगा ना, जब आपका नंबर आएगा तब ये सिर्फ स्क्रीन शेयर करके उसको एनलार्ज करना।
यस सर।
फुल स्क्रीन।
ओके या
चलो, वी कैन स्टार्ट एक्चुअली शार्प 6 o'clock.
Yes,
35 people are there.
It's time, yes, sir. We can start.
आपसे भी आप लोगों ने दिखा।
Shall I share check and check, sir? Just
Yes,
a
sir, please.
second. Yeah. Yeah. Okay, sir.
Yes, sir. Full screen. Yes.
Okay. Done. Done,
Perfect.
sir. Perfect.
No, it is just,
चलो, we can start.
did anyone see, sir?
या कुमारी सर का हो गया, देखा मैंने। So let's start. I feel 35 40 people are there. Hello.
Yes, sir.
Good evening, everyone. I welcome you all to this webinar on all about insurance. I feel we as private practitioners are a little not totally aware of all the things that we should be doing when we take all our insurances. So it just came to my mind that let's all learn more about insurance, and we are trying to cover everything that we can, which are useful in our day-to-day life, right from indemnity, car insurance, household insurance, travel insurance, and all things that are required in for insurance point of view. I would at the outset I would like to thank our national ISA body, especially Dr. Bajwa sir, for sending out the flyers and giving us a chance to host this meeting on the last Tuesday of every month. And of course, the national ISA body is always there with me to see that these webinars continue at least once every month. The first 5 webinars we had were mainly for the region wise, because we wanted to know what are the problems in each region. And the West Zone, South Zone were very actively in participating. We had very good feedback from them. The other zones, they were active, but I thought that they could have been a little more, much better, considering the attendance was only about 70 to 100 in the last 3, whereas the first 2-3 webinars we had almost 200 plus members in both the first 2 webinars. Coming to today's topic, I feel we have a galaxy of speakers, and at the outset I would like to welcome our chairperson for the evening, Dr. Professor Rakesh Garg, who I feel requires absolutely no introduction. He has taken our IJA to absolutely great heights, and I feel you are very much aware of the way he's been actively posting in all groups that wherever he is accessible to. So I feel it's great to have him as a chairperson. So would you like to just give your opening remarks, sir?
Thank you so much, sir. Thank you so much. And thank you, all of you, for taking this good initiative, because I agree that academically and clinically we have been doing work, but simultaneously it also becomes very important to understand our finances and other aspects. So kudos to you and the whole team, including ISA National, at such type of webinars with the galaxy of experts who will be highlighting the important aspects from various other things, including finances and insurances. So thanks to you for inviting me, and my best wishes to all of you.
Thank you, sir. Thank you. Uh, we had the West Zone webinar where Dr. Nilesh Nafde had spoken at length about indemnity insurance. And I feel I just thought of highlighting a few points from his talk. Like, he mentioned, I remember, about AOA and AOY ratio. This determines the limit of indemnity. The occurrence-based policies, which are tail covered, are better than having a claims-made policy. It is better to buy a run-off cover before you stop practice to keep claims, because the policy remains valid and active. Your policy should always allow out-of-court settlements and also pays supplementary expenses if required. There should be nose coverage, so that it should be covered by paying an additional premium. And your CP has recently modified, so it has been found that at least about 1 crore of cover is required for indemnity. So the first speaker today is Dr. Ala Prasanthi, and she'll be talking on, we have discussed basics about indemnity. So how much is enough? This is what I feel Dr. Ala Prasanthi will speak on. Please, madam. Dr. Ala Prasanthi is a medical director and a medical legal consultant. She practices in critical care, trauma, resuscitation, medical law, and ethics. She's been the president of the Andhra Pradesh ISA in 2022-23. He is the vice chairperson of the Women Doctors Wing of IMA, and he has also received the ISA National President's Precision Award in 2023. Over to you, madam.
Thank you, Dr. Pankaj sir, for your kind words of introduction. And I thank PPF in charge or authorities wholesome Dr. Pankaj for giving me this opportunity to speak on professional indemnity insurance. How much is enough? As Dr. Pankaj has already briefed us about Dr. Nilesh Nafde's talk on professional indemnity, which was at length, and he discussed deeply all the points. He discussed all the points very widely. Now, today's topic is on how much insurance is enough for an anesthesiologist. So, as we all know, professional indemnity is some third party guarantees for the compensation, guarantees the compensation for losses or damages incurred. We are one party, patient is another party. So the third party, that is the insurance provider, he guarantees the compensation for the losses or damages incurred to the patient caused by the doctor. So how we should select, what are the determinants to select this indemnity insurance? How much?
Make it full size, madam. Slides.
This is full slide only, sir. No?
No, it's not.
Just a minute, sir. I will share it again. Now?
Yes, ma'am.
Okay. So it depends on the specialty. As anesthesiologists, we practice different types of specialties like pediatric anesthesia and neuro anesthesia, cardiac anesthesia, all those things. It depends on how risk specialty you are practicing and the area of practice, whether you are practicing in tier 1, tier 2, tier 3 cities or small towns or remote areas. It depends on that. And the type of patients, the heavier the purse of the patient, the more you should be indemnified. And the number of patients you handle per year also determines the indemnity you have to take. And as per the revised CPA, Consumer Protection Act in 1998, far higher pecuniary limits have been fixed for commissions at various levels. Previously, at district level, it was around 20 lakh rupees. Now, it has been increased to, in district commission, up to 1 crore. State commission can entertain complaints up to 10 crores, and national commission can entertain claims above 10 crores. So, see, this is one encouraging point for the people, that is the patients and their relatives, to seek higher compensations. That is, they can simply go put a complaint or file a case in the consumer forum for 1 crore in a district level itself. So we should be very careful, and the cost, the court fees also is very less, maximum of 7,500 up to 10 crores. So we are at more risk with this CPA Act. So is 1 crore insurance a minimum requirement? So this is the famous landmark case, NIMS versus Prashant Danaka. In 2009, Supreme Court has given this landmark judgment. So that patient was bedridden after surgery, and we will see how they have calculated the compensations. Loss of future earnings, how they calculate is income per annum. Suppose it is R, and suppose the patient's age is 35, probably working years till 65. So 30 more years he will be working. So R into 30, that is 30R. So as I have already told you, the more he earns per month, the more indemnity, the more will be the compensation if he has some mortality or morbidity and we are awarded to compensate. And then the present burden of expenses, prospective burden of expenses, that is attendant charges, physiotherapy care and all that, pain and suffering. So all together they calculated and they claimed for 7.5 crores, but Supreme Court in 2009 itself, they awarded a compensation of 1 crore rupees. So now, so this is another case. This is Tagore Medical College. Recently they have given, they directed the patient. So they did CPR for a patient who had anaphylactic shock. So the patient remained in vegetative state after CPR. So the court directed, the district court actually directed to pay a sum of rupees 89,000 as a medical bill and 50 lakh rupees as damages towards the monetary loss and mental agony. And this is the important, interesting thing, 75,000 rupees per month till her lifetime of the said patient towards her recurring medical and maintenance charges. So total is 51 lakh 14,000 and odd plus 75,000 monthly. So even though we insure, we have an indemnity insurance for 1 crore and 51 lakhs is paid, 75,000 monthly, the insurer will pay for that year only. For the next years, we only have to pay. This is a new thing that was given. So then this is another case, though this is not related to anesthesia, I just put it because this was of a radiologist, he missed some and detect some anomalies. So he and his imaging center were directed to pay jointly and severally rupees 1.25 crore to the complainants. So 1 crore also is not enough. 1.25 crore should be paid to the complainants, he and his imaging center. So here we have to take in mind that the imaging center or the hospital or clinic, all those centers also should be indemnified. They should be indemnified separately. Then, so next. So now we go to the concept of AOA and AOY. AOA is any one accident, AOY is any one year. The coverage amount provided by indemnity insurance is referred to as the limit of indemnity. So this limit is defined for each accident and within each policy period. The proportion between AOA limit and AOY limit is customizable. We can make it as 1:1, 1:2. I will explain. AOA limit indicating the maximum payout for a single accident. AOY limit indicates the total limit of the indemnity policy per year. In that year, you can get that maximum. And any expenses beyond that limit is the responsibility of the medical practitioner. Suppose we got an indemnity insurance for 1 crore and the court ordered us to pay 1 crore to the patient. So we will think that 1 crore, okay, we are indemnified, bal bache, we are indemnified for 1 crore and court also gave for 1 crore. But where are the other expenses? Who will pay for the other expenses? Legal expenses and all. Who will pay? That will come to another maybe 10 lakhs. Who will pay? We have to pay. Any expenses beyond that limit is the responsibility of the medical practitioner. So we have to keep in mind those additional expenses also while we are taking the indemnity. So this is AOA is to AOY. So 1:1, full sum assured for any one claim. So policyholder chooses sum insured of 1 crore, claims with 1 crore within duration, coverage up to 1 crore is available for that claim. So if it is 1:2, only 50% of the sum assured will be given for one claim, and the next 50% will be for the second claim in that year. So if you insure for 1 crore and if the court gives 1 crore or 80 lakhs, you have to pay 80 lakhs as a compensation. The insurance company will pay you only 50%, 50 lakhs. The rest of the 30 lakhs we have to pay from our pocket, because the rest 50 lakhs is reserved for the second case that might come in that same year. Okay. So next is 1:3 is 1/3 of the sum insured for any one claim. Then 1:4 is 25% of the sum insured for any one claim. There are no 1:5 or 1:6 AOA is to AOY, because every 2 months we are getting one case, means it's better we stop the practice. So no insurance gives AOA is to AOY more than 1:4. But the recommended is go for 1:1. So now you are a freelancer. How to take an indemnity insurance? You have to take an indemnity insurance based on those determinants which I have already mentioned: type of practice, type of patients you serve, what is the area in which you live, and all that. Okay. So, and you have to take a minimum insurance of 1 crore. And please keep in mind the extra expenses also. So if you want to take for 1 crore, adding up the extra expenses, better go for 1.5 crore or 1.2 crore, like that. Suppose you are a hospital owner, you have to take insurance for yourself and the hospital also, because hospital, the cases will be different. Somebody might fall from a stretcher, then they will sue the hospital. Some you have done a case in your hospital. The surgeon, the anesthetist, and the hospital will be asked to pay jointly and severally. So the insurer, your personal indemnity will pay for your thing. The hospital insurance for pay for the hospital, and for the surgeon should pay. So if you don't have a hospital indemnity for the hospital, you have to pay for yourself and the hospital also jointly. Okay. If someone is not able to pay, then you have to pay their part also, because we are all partners. In partnership, all the partners are liable jointly and severally. Okay. And the vicarious liability also, for the sake of vicarious liability, for all the unqualified or for all those things that are done by the staff, the hospital is responsible, liable. So we have to take separate indemnity for the hospital also. Then, so many of us will be thinking, I have 1 crore insurance in X company and I will take another 50 lakhs insurance or another 1 crore insurance in Y company. So what about this? Is it advisable? So single company insurance, what are the advantages? Simpler claim process. You have to deal with only one insurer. So this reduces the risks of disputes over the liability. And cost effective. Single policy with high coverage limit can sometimes is most of the times more cost effective than maintaining 2 separate policies. And it avoids overlapping or conflicting clauses. Suppose you take 2 insurances, that second one will, those 2 companies will ask you whether you have insured with any other company. If we write, we have to inform them everything. Yes, I have insured with another company also. So all these things we have to let them know. If we don't let them know, there will be some conflict. Okay, so no risk of conflicting terms and conditions between 2 policies, which can complicate the claims. And unified coverage. One policy ensures all aspects of your practice and covers uniformly without gaps or duplications. So what is the disadvantage? Single policy, if you exhaust the limit of your single policy, there may not be additional coverage available, but we will see if we take another policy, what is the advantage. And the dependence on one insurer is another disadvantage, they say. But suppose we have 2 separate insurance policies, what are the advantages? Higher aggregate coverage, diverse risk management, and here 2 insurance diversifies the risk. So offering some security if one insurance has limitations or financial instability. And specific coverage needs. You can tailor each policy to cover different aspects of your practice. Suppose you are an anesthesiologist, many of us will be practicing anesthesia and pain, anesthesia, critical care, like that. If you are, so you can diversify your practice aspects and then get 2 insurances if you are interested. Then what are the disadvantages? Complex claims process. If for the same thing we claim for 2 companies, there will be complexity and there will be a potential for disputes or which the insurer should take. So, and there is increased costs. Maintaining 2 separate policies, it often results in higher premiums. So instead of that, you can choose for a single insurance company with a good premium. With a high, see, with same 2, instead of maintaining 2 premiums, you can make it a single premium and for a better policy. And policy coordination issues also will be there. Okay, because the insurers, they always try to shift the responsibility on the other one. So we will be facing problems. Already we will be disgusted because we have get a case on our profession. So we are facing a case. Already we are morally depressed, and now financially, instead of giving support, because we have taken an indemnity insurance to have mental peace, we have taken a financial peace, we have taken indemnity insurance, but they will be creating problems. They will try to shift the responsibility on the other one. Then, so what are the recommendations for most of the practitioners? Single comprehensive policy with sufficient coverage is usually more straightforward and cost effective. For high risk or complex practices, if you require very high coverage limits or if you have diverse practice needs, 2 policies might be beneficial, but it is essential to manage them carefully. And always remember, please review the policy terms carefully. Read the fine print carefully. Then we all know about top-up insurance. During COVID, all of us had top-up health insurance policies. So I think most of you must be knowing about this term at least. So when Primary policy is the main professional indemnity insurance, which covers you up to a certain limit for claims. And top up, this provides additional coverage above the limits of your primary policy, and it only activates when the primary policy's coverage limit is exhausted. Okay, so some advantages are there: higher aggregate coverage, cost effective, simplified claims process, because you are dealing with one insurer, your primary policy provider. So the process might be simple. The customizable coverage might be there, and it fills the coverage gaps. If your primary policy has sublimits for some claims like the legal defense costs, a top-up policy can provide additional coverage for those expenses. But you have to consider some things. You should ensure compatibility with the primary policy in terms of coverage scope and exclusions. Understand the trigger point, that is the point that where it activates. Typically, once the primary policy's limit is fully exhausted, you have to know when it activates, at what limit it activates, after what limit it activates, and check for exclusions and limitations. So when you are taking a policy, and this is the one that was offered by one insurance company. So it boasted like this: better benefits at best price, covers pre-litigation cost, lawyer appointment, experienced medical legal panel, compensation paid directly to beneficiary, out of court settlement, cover loss of documents, covers defense cost for criminal, no subscription fee, best AOA AOY ratio 1:1. All these they have put, and they are claiming that we will provide you with all these services, but each service will have might have a separate fees. So all are not included, or whatever is has come as an aggregate for your case cannot be covered, or everything cannot be covered in that insurance itself. If 1 crore indemnity is required, we should plan for 1.5 crore to cover all the costs. So the take home message is a minimum of 1 crore is required. With AOA is to AOY 1:1, single insurance policy reasonably covering with a reasonable cover is recommended. Thank you.
Excellent presentation.
Thank you, sir.
Thank you, madam. That was a very, very nice talk. And I feel I welcome Dr. Ganesh Tendulkar, our moderator for this evening. Dr. Ganesh, I feel is having some network issues. In the meanwhile, he'll be taking care of the questions. I'm sure Dr. Rakesh Garg will have to give his comments on this talk. All the questions we will take at the end. Okay.
Right, sir.
Yeah.
Yeah.
Okay. No issue.
Yeah, I think Madam has nicely covered the aspect of taking insurance, and this usually comes up with many people who are taking the insurance policy that company X and company Y, or a combination of it. So she has covered them nicely. So it becomes very clear that we have to see the fine prints to understand our requirement, and nothing comes without seeing them. So she has nicely explained those issues very clearly, and I'm sure that this will be a wonderful talk for key message for everybody to understand, those who are planning to take it. And as Pankaj sir mentioned, we will be taking up this question. There are certain comments and questions in the chat also. I think we may be taking at the end also.
Thank you.
Very, very, very good take-home messages, madam. Thank you. Thanks a lot.
Thank you.
I welcome Dr.
And I should
Yeah,
thank
very
Dr.
good.
Sir, just
Very good
one
talk.
point, sir. I should thank Dr. Nilesh Nafade for this, sir. I went through his video.
Okay.
And I
Good,
talked
good,
to
good.
him also,
Yeah.
cleared some doubts. And
It is
Good. Thank you, madam.
Thank you, sir.
I welcome Dr. Chakra. I just saw him on the screen. Welcome, sir. Our next speaker is Dr.
good evening,
Anshul
sir.
Divakar. Good evening, sir. Our next speaker is Dr. Anshul Divakar. He is a freelance practitioner and anesthesia teacher. He conducts master classes for the postgraduates for the last few years. And I feel he's a certified financial and medical legal expert. I've heard him before. His presentations are fantastic, to the point. And I'm sure you all will, at the end of his talk, he will make me proud by giving him this opportunity. Go ahead, Dr. Anshul.
Good evening, everyone. Thank you so much, sir. I thank everyone from the bottom of my heart, especially Dr. Pankaj, sir. He has been an inspiration to all of us, especially the young freelancers. I've learned a lot of things in my practice from just by talking to him over the years in conferences, and it feels great to be a part of this talk. Today, I'm going to talk something which is very, very important, and yet for the better part of the few years of any doctor, or especially a young anesthesiologist, is the most neglected part. That is the importance of health insurance. And at the outset, I want to tell you one very basic point, that you need health insurance, period. Irrespective of what you feel about it, what you think, what your prejudices are, from where you come, what sort of money you are earning, you need health insurance. There is no two ways about it. How to go about it, how to choose a health insurance, what are the things to look for, how to file a claim process, all these things we are going to discuss today. So why is health insurance important for doctors? So I had this entire write-up that I prepared, that I'm going to talk about the importance of health insurance. And yesterday I just happened to listen to sir, and he said one very simple line which just struck me, and I'm just going to say the only thing in an anesthesiologist's life that is going to make him financially weak is a health crisis. So that is the bottom line. I don't think anything needs to be told more than this. If there is anything that is going to take away your hard-earned money, that is a health crisis. Of course, we are in a high-stress profession, so there are a lot of lifestyle diseases that we will, or hopefully, or not hopefully, but most probably we will incur. So there will come a point when we will have to go for medical help. We are also exposed at occupational diseases because of the exposure at our workplace. And we want to make sure that we are financially stable, especially in medical emergencies. Still in India, most of the time, there is usually one or only two members who are earning in the family, while we have to support a large family. So I'm going to introduce you to the concept of health insurance. What is health insurance? It's a contract between a party, usually that is a government-based or a private party, where we pay them money on a regular basis in the lieu that whenever we will need that money in terms of any health issues for which we need to get the treatment, then the company is going to pay us back, pay the hospital back or to us back. So that is what health insurance is. What it does is it gives us financial protection against medical costs, because you don't know when the medical cost is going to be incurred, but right now you have money. So you pay small amounts of money, and because a large number of people are going to pay to the health insurance providers, so they are going to have a lot of money, and only few people are going to take the claim. So one might feel that why would they give us money, because I am only paying them 20,000 rupees a year, and I am wanting in lieu, say 10 lakh rupees of insurance. So why would the company pay? So they have this internal bias where they think just because we are paying very less, we will not get be paid, and this is a scam. But that is how the insurance industry works. They take it from large number of people and they have to give to very few, so they always end up earning money rather than spending money. It also covers your intra and post hospitalization expenses, treatments, everything. So it keeps you at peace. You don't have to pay anything out of the pocket, especially when you're not working. That is something which is of great concern. What are the other benefits of having a health insurance? Of course, the cashless treatment. There's nothing like it. You enter the hospital, you come out of hospital, and you pay 5,000 rupees. The bill comes out to be 2.5 lakh rupees. You look at the bill and you feel very proud of yourself. We are all Indians. We are all semi-middle class or middle class, where if we get something for free, we are very happy. And this is something like that. If you are in a cashless network and you get operated or you get a treatment and you don't have to pay a penny, that is something that automatically your post-operative recovery will become better. It also covers pre and post hospitalization expenses. So in case you need chemotherapy, or there is an orthopedic injury and you need braces or anything in the post-operative period, that also will be covered. You get better healthcare. This is one of the most important points. Why? Because a lot of times we cannot approach a very big corporate hospital because we start comparing the bills and we try to compromise with the quality of healthcare that we want at that point of time, purely because we feel that it is too much to pay for. And of course, there is small element of tax benefit under Section 80D. I feel that is okay. That should not be much of a criteria. But yes, you will get some money back in form of the tax benefit. It, of course, gives you financial security in terms of both your need or your family's need. Why do we especially need health insurance? Apart from, actually, the government of India says that the 90% of population should be covered through health insurance. And that is why we see schemes like Ayushman Bharat. But specifically, we need as young doctors because of, sorry, sir.
May I request those who are not speaking just to keep themselves mute, please? Just a humble request. Thank you.
All right. So we are now, we young doctors, we are at greater health risk due to the greater exposure. Also, our lifestyle is very poor. We are in a high stressful job and we tend to eat a lot of junk food. So any lifestyle related problems will obviously be 10-15 years from today would be more common in younger population. Of course, emergencies, and I am myself a victim of that emergency. I was walking with a friend in the evening and I just tripped and I fell into a small ditch. It was just a 3 feet deep ditch, but I had multiple fractures in the foot for which I got operated and it was a heavy bill. So emergencies can come anytime. And of course, the cost of healthcare is rising every day. We know because we are also a part of it. So we know that every year we see around 10 to 15% rise in the healthcare, which will also be applicable to us. Nobody is going to give us treatment for free. And when you know that whatever happens to you or your family, then the treatment part will be taken care of. It gives you an amazing mental peace, which helps you approach any stressful situation in a better way. Coming to the nuances of health insurance, we have different types of health insurance policies in India. One is, of course, a government-based policy, which is what we call as Ayushman Bharat, and different states have different policies. We are not really concerned about it because the coverage is very less for above poverty line. And of course, we don't get such quality treatment. But yes, if you talk about the purchasable health insurance, then it can be from both private sector companies as well as government-based companies. You have individual health insurances, then the commonest ones that we are being offered and we take, that is a family floater, that is one policy for all family members. Then now you have a lot of riders in critical illness insurances, which either can be bought separately or they come along with your main policy. You have personal accident insurance and group health insurance. Group health insurance is something that is very commonly done when you open a bank account and they offer you a health insurance along with a bank account. That is usually a group insurance policies whose premiums are pretty low. What are the factors to consider when you are choosing a policy? So the biggest and the most important factor is, of course, the sum insured and the premium that you have to pay. Sum insured should not be based on what you are feeling and what you are seeing as medical expenses right now, but I feel it should be what you will need about 15 years from today. I'm talking about somebody who is in their mid 30s to mid 40s, because most of the time you take a claim after about when you are 50. So considering that we start the policy in our early or mid 30s, but the first time we take a claim is somewhere around 50. So you don't calculate your sum insured from what you have to pay today, but what you are going to pay 15 years from today. So that would be almost thrice or 4 times of what you think you're going to pay for a surgery today. Of course, you will look at the premium, but always calculate the premium based on what it would give you back when you take the claim. And then you will realize the premium is pretty low. You have to also look at the coverages of medical conditions, especially the critical illnesses, because not every policy comes with a critical illness rider. If you feel there is a family history and if you feel, no, I want complete protection, then you have to take a rider of critical illness, which is not something which is very expensive, but yes, it does need to be clicked when you are taking a policy. A very important point to consider is the network, hospitals, and the cashless benefits. Now, what I have done is I have decided what is my area where I would go for a treatment in case I need a surgery. So I reside in Chhattisgarh, and because I've done my post-graduation from Mumbai, so I know Mumbai hospitals. So what I did when I was purchasing my policy, I went to the website and I saw all the list of cashless hospitals and all the hospitals where I would probably get treated sometime in the future. I saw whether they are available. So it is always better that you have an extensive cashless network so that you don't have to go to the trouble of first paying, then taking all the document and then filing the claim process and then struggling with the company. It is always better to have a insurance provider that has a wide number of hospitals for cashless and specifically in the hospitals where you want to get treated. Claim settlement ratio is something that you can get on IRDAI website. Also, there are a lot of YouTube videos that you can see which give you claim settlement ratios. These are released every year, and any company that has a claim settlement ratio of more than 90% is usually the preferred company for you. Waiting period for pre-existing diseases needs to be checked in case you have a pre-existing disease or you feel you're on the verge of getting diagnosed. This is something which is very common. somebody in their late 30s, they start having headache and they go to a doctor and they find that, okay, now they're hypertensive. That is the first time they realize, okay, I need health insurance. Now I think I need to look at my life. So you need to understand that then there will be, because you have a pre-existing hypertension at that point, which is just on the verge of getting diagnosed, you might have to wait for 12, 24, 36, 48 months, depending on the type of the disease. All of these things are usually told to you in the fine print before you take a policy. Once you apply the policy, in the process, in the underwriting process, usually these things are something which are told to you in great detail, and you are supposed to look at these things. What I've tried to do here is, I've tried to just give you, this is very old, so don't go by the premiums. I'm just trying to tell you what all things you look in a policy. So as you can see, on the left-hand column, there is a basic sum insured. That is the policy amount. Then you have the premium, of course, that will change. This is 2016 image that I'm putting here. Then see what are the hospitalization benefits. So waiting periods, see different insurance agencies have different waiting periods. Some have 2 years, some have 4 years, some have 3 years. Then hospital accommodation. Now this is when you go to a hospital, then suppose you have a sum insured of 10 lakh rupees. Certain policies have limit to the hospital accommodation. So they will write 1% of sum insured. So 1% of 10 lakh would be 10,000 rupees. So if you are in an ICU that has a per day cost of 15,000 rupees, then 10,000 will be covered by the insurance agency, but 5,000 you have to give. So always go for a hospital accommodation where there is no restriction or sublimits. Then pre and post hospitalization, it varies from 30 days pre to about 60 to 180 days post hospitalization. If you have all the bills along with the doctor's prescription, it will be covered. Then there is also an option of hospital daily cash. So you are the only earning member of the family. Now you are in the hospital. How will the family survive? So they can give you daily cash for your survival, for your use of the family members in the hospitals. It can range from 2,500 to 7,500 depending on what policy you are taking. Then you have emergency ambulance services. You can see the cost is mentioned. Either there's an upfront cost, 1,500 rupees, or as per your network hospital. Then organ donor expense. This is something that has new come up in last few years, where if you are either donating an organ or you are receiving an organ, then certain policies do cover that as well. Copay. I'm going to talk about copay more, but copay is when you tell the insurance agent, okay, this is what I'm going to pay upfront whenever there is a claim. Whatever is above that, I'm going to ask you to pay. That is called as co-payment. So you are now co-paying with your insurance provider. Now, daycare procedure is very important because a lot of hospitals now do a lot of surgeries under daycare, but the old policies, they do not cover daycare procedures. Problem is daycare means admit, operate, discharge on the same day. So overnight stay in the hospital is very important. And if the surgeon or the hospital refuses for overnight stay, then despite of having a policy, you won't be able to take the coverage. Then there are certain domiciliary expenses, which are usually not very important for us. And then alternative treatments, which have now been included. So Ayurveda, homeopathy, ancillary treatments, physiotherapies, these are also covered. Then maternity benefits, that's a completely different, altogether a different thing, because that is a short thing. So the premiums, they go skyrocketing. So this is something that has to be taken separately. And newborn baby cover along with maternity benefit, it comes. Then you can see there are certain renewal benefits. So most of the policies, when you take, if you don't take a claim in the first few years, then they automatically increase your sum insured. That can range from 10% to 50% to even 100%. Then there is loading on the claims, which is if you have taken a claim, then will the premium increase? Most of the policies, they don't increase the premium these days. And annual health checkups are included in your policy, which is written in the fine print. So you can go to their network diagnostic center every year, get all the investigations done, and they will pay for it. And then, of course, you have to look at the claim settlement ratio. How to choose the right health insurance plans. So first, you need steps to evaluate and compare plans. You can either do it through an agent, or you can go to websites like policybazaar.com, where everything is in a snapshot. It is very important to read the fine policy print. I do one thing along with that. I always go to YouTube and type that policy and write review. Somebody would have shared their experience, either pre-policy, taken the policy, or getting some review after the policy, which helps us a lot. Ensuring family coverage is needed. And this is something that you have to always remember. Either take individual policies or take a big family floater policy. Doesn't matter. If you take individual, that is the best. But if you feel, no, I am the one who wants to pay the premium, I am the one who wants to get the tax benefit, and I am the one who wants to manage, then take a large sum insured and take a family floater, so that will include all the family members. Selecting a plan which is based on your age and health condition. So you know there is a previous history, you know that you are somebody suffering from a disease, so you need higher plans. Now, there is a very common question that is asked, what is the difference between a top-up and a super top-up? So I've just tried to keep it this way. Top-up plans, they cover claims above a specific threshold. So that is like a deductible thing. So your base policy, top-up will only come when there is the base policy expires. It is applicable on per claim basis. That is, deductible must be crossed for each claim individually. And it is suitable only for individuals expecting fewer claims or high claim value. But now most of the insurance providers, they give you super top-up policies, which are like a continuation of the policy. So you don't have to make a reclaim. What happens is, once your base policy gets exhausted, automatically the super top-up kicks in and it will be covered by the super top-up. Now, there are few things that you should always remember. Always take the super top-up from the same company from where you have the base policy. So there is no jurisdictional problem. And always make sure that you have a big super top-up because the premiums are very less, so that you're covered for the entirety of the claim process. Copay. Now, copay is something which is coming up big time in India. It is something of established thing in the Western countries, where you decide that you will pay either a fixed percentage of the medical expense or you will pay a fixed amount, whatever it can be. So what happens is, the advantages are lower premium amounts due to shared costs. So you save a lot of money in premiums because the premium can decrease by almost 20%. It helps you prevent unnecessary claims. Now, suppose I just had a small abscess. I went to the hospital, I got it drained. I was there for a day. The bill came 25,000. I don't need to worry about taking a claim. But because we are Indians, we are paying the premium. If I have a complete policy, I would want कि नहीं मुझे 25,000 मिलना चाहिए. But in this case, what you will do is, okay, it's okay. I've already taken a copay of 50,000, so I'll pay this. So you have to claim less, so less stress on you. It also allows insurer to manage risks better. Disadvantages is higher out-of-pocket expenses for policyholder in case you have multiple claims. Suppose you're being unlucky or undergoing multiple surgeries or in the hospital in and out, then this becomes a problem. It can lead to financial strain in case of frequent medical treatments and may discourage treatment for minor issues due to cost sharing. What are the do's and don'ts while choosing a health insurance plan? So you assess your needs and risk of exposure. You always compare policy features and not just the price. Yes, price is important, but not just the price, also policy features. Opt for a comprehensive plan with sufficient coverage. My take is very simple. Take a large, big plan rather than a small plan and a super top-up. Two different premiums you have to pay rather than take a large, big plan. Cover yourself for next 20 years. Ensure the policy includes cashless hospital networks, especially the hospitals which you want to go. What are the don'ts? Don't pick a policy just based on low premiums. And that should include all the policies that are used as a group health insurance policy, especially the bank policies, because they change their terms and conditions after you have received the policy from them. Always make sure that you get a medical examination and investigations done beforehand, and you keep that entire the list of investigations they got done with yourself as well, so that later on there cannot be any claims that, okay, you hid that particular information. Avoid under-insuring yourself. Don't think of today. Think of 15 to 20 years from today. Don't ignore the policy terms and conditions. Like, you will not look at copay. You will opt for a copay and later on you will say, no, that is not my fault. It should not happen. We are all learned people. We should know how to read the fine print. And always, and I mean it, always disclose your pre-existing diseases, habits, hospitalizations. Nothing, even if it was a small IND at the back you had some 15-20 years back, just mention it so that they should not find a reason to reject your claim. I'm just going to brief you with the claim process. So cashless claim process is very easy. You need to get a pre-authorization from the insurance company in case of an elective procedure, which can be done anytime within the 24 hours of your admission. It is usually a mail or a phone call that works. You can always find the list of network hospitals from the number that they give. Reimbursement, you have to intimate them that you're going for a surgery, then they will accept and they will give you a claim settlement number. After the procedure is done, you have to receive 2 claim forms from them, claim A and B. Usually A is filled by the hospital, B is filled up by you. You put all the investigations, everything that the hospital gives you and what they demand, and then you send it to them and then they process it and send you the money later. Common health insurance exclusions, which are not included in the policies, are pre-existing diseases during the waiting periods. Cosmetic and dental procedures are still not covered. You have to have a separate dental insurance, or big policies now cover dental procedures up till 15-20,000. Injuries due to self-harm or illegal activity, something which is very, very important. Alternative therapies, unless and until mentioned, or newer procedures are usually not covered. Mistakes to avoid in claim filing: not understanding the policy waiting period. So you know you are diabetic and you still want to take a claim in the first 6 months after you have taken the policy related to diabetic foot, you would not give. Failing to provide required documentation: don't fight them. Please don't fight insurance providers. Give them whatever they want. Give them more than what they want, so that you always have these things later on, that I provided you everything. It was your fault not to pick up any problems with that. Missing deadlines for claim submission. See, the claim submissions have to be done within 30 days of intimation of the claim or your discharge. And if you fail to do so, then they have the right to reject the claim, and not informing them on time. So you go to the hospital, you get treated, you do everything, and then you come back and 15 days later you say, okay, I went to the hospital. So it doesn't bode well with them. The tips for young doctors on managing health insurance is periodic review of your health insurance. You don't need to stick to one insurance provider. Now the government of India, IRDAI, they give you the porting facility, which can be initiated within 60 days of your insurance renewal. So always be on the lookout of a better plan. If you have a better plan available, you can always port. Nobody is going to ask you any questions. Just contact the new policy people. Tell them I have an existing policy. So all your benefits from the original policy, the pre-existing periods, the waiting periods, the pre-existing diseases, they get automatically transferred. Consider top up and super top up if you have the existing policies with you with a base amount which is less. Keep a track of renewals and upgrades, and remember not to miss the deadline. So always put it on auto pay, because every single day after the last day of your health insurance that you have missed, usually that is the reason that they reject the claim later on, saying that you were not compliant with the premiums. And so this is the reason why we are doing it. And know your policy exclusions and coverage limits. This is what I wanted to discuss, and I wanted to tell especially young anesthesiologist, although everybody needs it, but usually after an age, I feel automatically people start realizing the importance of health insurance. But it is the people who are in their late 20s, early 30s who tend to ignore the health aspect. So health insurance is an investment into your financial security and your well-being. So don't consider it as an expense. It is an investment. It is going to give you back great returns. And it is very, very important in the current context of rising healthcare and unforeseen medical emergencies that you're always protected by something like health insurance. So thank you so much for patient listening. And I hope I was able to clarify most of the things. And I'll be happy to take any questions at the end if you have. Thank you so much.
Thank you, Dr. Anshul. That was a very, very nice coverage of the topic. When you were talking, I was just reminded of a case. When we take personal history from patients as anesthesiologists, there was an anesthetist who mentioned that patient occasionally takes alcohol. Now, when the patient claimed, the insurance company refused to, accept the claim, saying that you are an alcoholic and it was not mentioned to you. And now that patient has filed a case against the surgeon that I am not getting a claim because your anesthetist has written this. So this is something new which I just remembered. I mean, school for thought for all of us. Probably I feel in the PAC notes we should be writing patient denies history. It's not our cup of tea to decide whether he's an alcoholic or not. But maybe from the insurance point of view, if you have a cashless insurance, I feel it's better to just make a statement that he denies history of alcohol and let the insurance company and the patient decide. Thank you, Dr. Anshul. Over to Dr. Rakesh
Yes,
for his follow-up.
Thank you so much. I think Dr. Anshul, you have covered it nicely. What I could perceive is as we individualize our anesthetic care for all our patients, there is nothing called ready-made recipe which can be applied to all the patients globally, universally. Same probably would be for these type of insurance policies. Everybody has their own needs depending upon so many factors which you have mentioned, and everybody has to do a groundwork. I think when these type of webinars happen, I'm sure people will ask, you tell me that which will be the best policy for me. So I think this question will be too difficult, and you have very nicely summarized it, that everybody needs to understand their requirement, the place they are working at, what they want, and they have to do a little bit of groundwork. But your presentation will help them a lot to do that groundwork and understand what the implications are. And at the same juncture, I will request Dr. Pankaj Gupta to take an initiative, because even when we go on Google, there are many platforms, like you said, Paisa Bazaar, which compares the policies, and then you can look for which suits you best. But at the same thing, I think ISA National, ISA PPS Forum can take an initiative, and Dr. Anshul can help it out to make a small template that what are the most important points that we need to compare, and then people can fill it of their own. So if you have 20 points, which are the important aspect, like for example, inclusion of daycare, inclusion of top up, so they can just put it, and then they can think of that this policy suits them best, rather than you answering that, say, company X is the best policy for you. I think Dr. Pankaj Gupta can take this initiative. Thank you so much, Dr. Anshul. Really informative.
Thank you, sir. Thank you, sir.
Thank you. Thank you. Our next speaker is Dr. Bhadresha, who requires no introduction. He was the organizing secretary of ISECON Ahmedabad, and all in the stocks group know him so well. I mean, they just wait for his tips of the day. And thanks to his this one, most of us on the stock market are really doing well. I feel he's worked in Ahmedabad in all the ISS circles. He is also a PG diploma in medical legal systems, and one of his main assets, which I came to know in the last few years, that he has organized more than 14 plus international uh, trips for in groups, including the recent one we had this for the stock group. We had gone to Cordilla Cruise. Dr. Bhadresha will be discussing about household insurance, personal accident, and travel insurance. Over to you, Dr. Bhadresha. Please unmute yourself and share your screen. Unmute. No, unmute yourself, sir. You're still not audible.
Thank you,
Yes.
Pankaj bhai, for nice words, kind words. And thank you, Pankaj bhai, Rakesh ji, Honorary Secretary Bajwa sir, and all ISA office bearer for constantly upgrading the knowledge of the ISA member in all necessary fields. So first of all, thanks to you.
Thank you.
Now, compared to life, medical, and vehicle insurance, personal accident and household insurance is less popular in amongst the Indian public. Main reason is premium is very low in these two policies, especially personal accident and household. That's why agent or advisors getting very less amount. That was not emphasizing to take these two policies. So these two policies are very less popular. Now the first I am talking about the personal accident. Features of the personal accident.
Please
First of
unmute all.
these things, policy can easily be availed. No need of any pre-medical examination or any else things. Only income proof required. Same premium for all categories, including senior citizens. And policy is valid, but policy is valid only up to age of 70 years. Policy can be adopted from rupees 10 lakhs to rupees 5 crore. Premium is, as I said, premium is very low. Average premium for policy of rupees 10 lakhs is just rupees 750 to 800 per annum. And with this, non-earning spouse can avail 50% of the personal accident of the earning person. So this is, as I said, very less premium. Now, what is the advantage of this personal accident policy? First of all, policy is valid globally, internationally. Our medical policy and other insurance are not covering outside the India, but this personal accident is covered globally. It covers transportation or even shifting charges and also airlifting. If we take the rider, then airlifting is also covered in personal accident policy. Third thing is very easy to claim. Once we intimate the company, doctor or responsible person visit to the accidental person, and they immediately pass the claim. Most important point which I like is that in case of injury or temporary disability, this policy provides 1% of income loss, 1% per week, up to 104 weeks. Suppose we have taken the policy of 50 lakhs, then every week we are getting 50,000, which is a handsome amount. And up to 104 weeks, when we will start our work, up to that they are giving the 1% of insured amount. And in case of permanent disability, they are giving the compensation proportionate to the disability. In case of accidental death, they are giving 100% of the sum assured. So according to me, each and every practitioner person should have this personal accident policy, especially freelancers and especially youngsters. All should have this personal accident policy with the maximum amount. Now you can take the policy of the up to 5 crores, but they are when you want the compensation, they are giving compensation as per your last IT return. If amount is high, then they will check your IT return and they will give the amount as per your last IT return. So IT return is most important, and they are giving compensation as per your earning. So this is about the personal accident policy. Now household insurance, same like personal accident, where you see people taking the household insurance, that is really bad things or unfortunate things. Household insurance is also again with less premium. I will show you in second slide, but it includes all the type of damages out in the constructive part of the building or inside the building, which we things belongs to the building. It covers in earthquake, in cyclone, in flood. We know that nowadays, because of this climate change, anywhere flood can arrive anytime, anywhere. So it covers last in Baroda, each and every home was suffered with this flood. No one home was left with this flood. So this covers floods, electric breakdown, anything occurs to our appliances, and it covered that appliances also, fire, theft, accidental damage, or even some policies give you alternate accommodation also. Now premium is again, as I said, premium is very, very low. Average premium is between 3,000 to 5,000 for 1 CR or 1 to 2 CR coverage of house. This household insurance policy is covered under tax benefit also, and it also include replacement and repair cost. I think very few people are taking this household insurance, but everybody should have this insurance also. Now third one is travel insurance. Nowadays we all are traveling outside the India like regularly, repeatedly, and we have all have taken this insurance as and when required. But my advice should not fly outside the India without travel insurance. Should not. If you have traveled for 10 times and you have not need of that insurance, so don't think that this is useless. Every time take this travel insurance. It covers emergency medical expenses, compensation for luggage loss or delaying, trip cancellation, flight delay, or any miscommunication, in case of compensation in case of flight hijack, and compensation in case of accidental death. As I said, our medical policy is not working outside the India. So these policies must, they even cover the passport loss and so many other things. Now, again, premium of this travel insurance is also very low, ranging from rupees 50 to 100 per day per country. This is for $50,000 insurance. Basic insurance is $50,000 insurance normally required. All age group is eligible for this insurance, but premium is differ. Higher age, premium amount is very high. It is always advisable to purchase travel insurance offline. Two types, offline and online, both available. And online premium is about 30 to 40% less. But I am not suggesting online. I am always suggesting offline, because when anything happen outside the India, we all know that it is very much difficult to communicate and do all the things online. But if someone is present in the India for you, your agent or your advisor, then he will easily manage your problems. So always take travel insurance offline. Some countries require travel insurance mandatory before issuing the visa. they ask the travel insurance. That is the best thing. And if you want to drive self-drive in outside India, then comprehensive policy, it is little bit costly, but comprehensive policy is preferable. Now, if anything occurred, suppose delayed in baggage or lost passport, then you should take the certificate or register complaint letter from that authority, either airport authority or that government authority. This paper required to claim the insurance. Should not forget to take that particular letter. This is must. And so I think this is a very little things, but most important things. Should not forget to take everything from different agencies. Again, so many companies and so many other premiums are available. So take as per your agent or your advisory guide, or you should take all these three policy as and when required. Thank you.
Thank you, Badri bhai. That was, as always, excellent. Over to Rakesh, sir.
Thank you, sir. Very informative. I think now we have baskets of things that we should think seriously. And Badresh sir has added many aspects to it. Only I think maybe subsequently in the last discussion, I would request Dr. Badresh to just emphasize little more at how much amount or the sum would be appropriate for each category. So what are the parameters that one should think of, say, for example, say travel insurance. So how should we judge that this amount should be sufficient for visiting this country for this duration? And I'm sure that it will give an insight.
Yes, sir. Good question. As I said, minimum $50,000 is required for outside the India when you are traveling. In case of 50,000 to $5 lakh, they are giving the insurance, but $50,000 is minimum, and I think for a young person this is sufficient because we are doctors, so we can easily manage other things in India. So 50 and personal accident is covered in outside India also. So $50,000 is basic that is required.
Right.
In case of personal accident, as I said, take maximum because premium is very much less, and they are giving depend on your the IT return. So take the maximum as per your IT return. There are no more difference between the premium of 1 CR and 2 CR, right? And again, for household, 1 CR is a good amount to take the insurance of household insurance.
Right. I think this will give us an idea because when we are comparing the premium and thinking of the total budgetary allocation from our income, that this insurance will also be part of our expenses. So this will make a balanced approach. As the previous speaker also mentioned, that taking the premium for the purpose of premium, taking a less insurance may not be really of good benefit when you really have to pay out of the pocket. And working in even in a government sector, I have seen that majority of people in India still today have to pay out of their pocket for multiple purposes, personal accidents and all those things. So I think these type of insurance taken timely would be a great asset for safe family run and the family members. Over
Just
to
I
Dr.
want to add one thing. We all are using credit cards, and credit cards cover very handsome amount in case of accidental death, especially air accident. But there are some catch point. You have to use credit card last 30 or 60 days before the traveling. So everybody should have to read this instruction. And before traveling, if you have a credit card and we have not used it, and especially used for this coverage, single transaction is required. And they are giving 1 CR to 5 CR, depending upon the value and type of the card. So should activate your card before traveling. This is my advice.
Actually, in
So,
future, I'm definitely going to keep a separate webinar on credit cards and how cards should be used by Dr. Badresh, because he has explained to us many a times. So let's see. I look forward to having a webinar soon on cards also. Thank you, Dr. Rakesh, Dr. Badresh. That was a wonderful discussion. Over to my next speaker, Dr. Anil Sharma, he is a very senior consultant at Apollo Hospital, a very affable person, a very helpful, knowledgeable person, very busy in his own practice. He is a faculty for various anesthesia for transplant surgeries, robotic surgeries, onco surgeries, bariatric surgery. And the best thing about him, he never says no for anything. So over to you, Dr. Anil Sharma.
Thank you, sir. Thanks, Dr. Pankaj, sir, senior executives of ISA for giving me this opportunity. At present, also, I am covering this from the operation theater itself. So this is my topic today is about the car insurance. So this will not be a PPT because I feel that if your point has power, you don't need PowerPoints on a lighter note. So I will be sharing the exact thing, that is the invoice of the car insurance. So that will be a KISS approach, like keep it simple and straight. So this is from my own car, which I bought in August. So you will see on the screen, this is mentioned total IDV 1054025. This was a Brezza automatic VXI, right? So we are always going for the lowest premium. So we should never go for the lowest premium. What determines the premium of the car is IDV. Now, what is an IDV? IDV is insured declared value. So this is wherein everything lies about your car insurance. This is the base for the car insurance. So technically speaking, what is IDV? In simple terms, it is market price of your car, or the highest amount that your insurance company will provide to you in case your car gets stolen or it's a total loss. See, we all are driving very safe, but there are many people out there who are not adhering to this safety. So when your car meets a mishap, you should be focused on recovering from the trauma that you get, not what your car gets or not what your wallet will have. Kindly mute your mics, please. So to get over any such episode, when you or your car meets with a mishap, you should always have adequate car insurance and keep it in force. We should never go for the lowest premium, because if you can solve the problems that money can solve for you, there will be very less problems left in life. That is what I feel if you have adequate money. So what is this IDV? I told you. So IDV is a manufacturer's listed price minus the depreciation value. So every time you renew your insurance, you will see there is a depreciation. So who fixes the depreciation? So depreciation is as per the IRDA rules. For a 6 month, it's 5% depreciation. For 1 year, it's 15%. For 2 years, it's 20%. For 4 to 5 years, it's 50% of your manufacturer's listed price when you bought the car, right? So after 5 years, you can negotiate with your insurance provider about this IDV. So when to keep this IDV high, when to keep this IDV low. So suppose your car is in the 10th year, you can keep this IDV low to keep your premiums low. But suppose you have a high-end car, you know your car needs expert repairs. Suppose it's a Merc or it's a BMW. So it's better to keep this IDV high, so that in case of any problem or any mishap, the compensation amount that you will get will be of a higher remuneration. I hope I'm clear on that. Now coming to what are the types of policies that the Indian policy providers on car insurance, they provide us. See, we should always aim for a comprehensive car insurance policy. This comprehensive car insurance policy, especially for the new cars in the first 5 years, is very important. Why? Because it covers most of the third party liability as well as own damages. It covers the loss due to the theft, natural disaster, etc. And you will receive the full IDV. What was that? Insured declared value minus the depreciation that the IRDA prescribes. So I will share what is the other part of this liabilities and ratios. Wait. So if you see your policy which has been issued to you, there will be two sections. One is the own damage section. So in own damage section, what is this policy? So if you take only a standalone own damage insurance policy, then this takes care of own damage, that is loss to the policyholder's car. This doesn't offer a third party coverage or car insurance. And what are the add-ons that you should negotiate or you should have in your policy? The add-ons are in my policy, you can see there is an anti-theft device. So whenever your car has an anti-theft device, your premiums will be low and your IDV will be high. So this works to your advantage, right? And then you should always take a zero debt policy. What is this zero debt policy? Whenever your car goes for repair after accident, the cost of the accessories or the cost of the part, if you have taken a zero debt along with a comprehensive car insurance, you will get the actual cost of the parts. You don't have to go for the depreciated cost of the parts. And engine protection is a must add-on, especially for the newer cars for the first 5 years. More so in the areas which are flood prone and where you feel they're near to the sea coast, the engine protection is a must. Why? Because in case of any flood, water ingress, loss of engine oil, or any crankshaft damage or any gearbox damage, this is what will take care of your engine. It's the heart of your car. Then there is invoice protection, or technically called return to invoice. So now what is return to invoice? So whenever you are purchasing the car and your car meets an accident, the insurance provider will give you your car value minus the depreciation value. But if you have this return to invoice, it covers the full cost of the car, what was mentioned in the invoice when you bought it. So when you're buying the car, going back to or return to invoice should be an add-on, and it's a must because it covers even your road tax and it covers your insurance also. It covers all your government taxes, and you will get the full value of the car to buy a new car. Now, an interesting add-on nowadays is Key Protect. So what is a Key Protect? Nowadays, the cars are getting very swanky. You will have the key in your pocket and you can open the cars. And the locking mechanisms are totally different from the previous ones. They can be the remote ones, or they can be the cars where their radio frequency operated keys. So they are very costly. How many of you have realized whenever the new car keys are offered, there is an aluminum small plate with 4-digit numbers or alphanumeric code? Always keep that safe with you in your almirah. Why? Because in case of the loss of car, you can go to the dealer, show them this number, and they will provide you the exact duplicate key after doing the necessary formalities. So just don't have it hanging in your keychain. This is a number that you need to protect, right? And then that is a consumable add-on. So what is a consumable add-on? The consumable add-on in this particular case is, suppose your car meets with an accident, your AC gets a damage. So who will pay for the car gas, AC gases, your tire damages, your nut bolts, and all the other accessories? So these add-ons are very important while you are renewing your policy. So coming to the other part of it, which is the liability section. So we have a clear direction from the Government of India under Indian Motor Vehicles Act. So third party liability cover is mandatory since September 2019. So what we people do, just to save on the insurance money, since it's the only mandatory cover, we will go for, just go for a third party insurance. But what it covers is only the damage to the other person. That is the cost of repairs and replacement of the damaged vehicle, cost of the hospitalization and treatment of the third parties, and liabilities arising out of the third parties. But it doesn't cover the damage to your car. It doesn't cover any damage caused by the natural conditions. So we should not insist just because of the lower premium that, from government side, the only mandatory thing is a third party liability or cover. So let's go for that. Whenever you get a new car, mind it, first 3 years of third party liability is mandatory. So what else we have there? We have personal accident cover. What is a personal accident cover? Suppose you are driving your car and the car is registered in your name, you are having a valid DL, and the insurance policy also has your name. So you are covered for minimum 15 lakhs. You will see there is a column called PA, personal accident cover. And then what you should and what you must always take is the legal liability to driver. Sometimes you hire a driver, right? He is not under whom this car is registered. So by taking this legal liability to driver, if anything happens when the driver is driving, suppose he expires or he has an injury, so that covers the legal liability to driver. So all this will be shown on your policy paper. So whenever you negotiate the policy price, especially after say 5 years, so after 5 years, what will happen? The zero debt cover you will not get. You will not get the engine protect cover also. So we have to be very careful that what is the premium that we want to pay after 5 years. So start negotiating for your car insurance cover only after 5 years. Till 5 years, treat your car as brand new, because just in case your car meets an accident, you will always have to go for the newer car. So what are the other add-ons that we are having nowadays? Can you imagine there is a add-on for no claim bonus protection? Now this is something new. No claim bonus protection means you pay them some 5 to 10% premium extra and you can claim any damage. They have a limit, say 2 claims in a year, and still get the no claim bonus. So this is something very new. Then you have daily allowance cover. Suppose you are stranded in a different city because of your car damage and all that, they will take care of your expense. So that is called a daily allowance cover. And you have an emergency hotel stay cover also. Suppose you are stranded in a different city and they have towed away your car. Now till the time your car is ready, you can get the hotel coverage also, and they will provide you with an extra car. So whenever you are choosing car insurance, please don't go for the least premium, especially in the first 5 years of the car. What are the must add-ons is a no claim bonus. What is a must add-on is a zero debt. What is a must add-on is a return to invoice. What is a must add-on is a roadside assistance cover. And take care what you want from the IDV, whether you want your whole price back or you are okay with reducing the price in case your car gets damaged. That is all from my side, Dr. Pankaj.
Thank you, Dr. Anil. That was a good comprehensive talk on car insurance. Any comments from Rakesh?
Yeah, I think Dr. Anil has covered most of the aspects. So next time it will be again a good aspect to look for. Absolutely, all very clear, in fact.
Very clear. Thank you, sir. Our next speaker is Dr. B.S. Kumaresh, sir. He's done his MD from Madurai and also cleared PLAB and was trained in UK. He'll be talking on life insurance and ULIPs. He is among the first freelance practitioner anesthesiologist who is financially independent at the age of 51, which is, I feel, a dream for all of us. All in the investor forum follow Dr. Kumaresh's guidelines. He is an excellent teacher, excellent orator. He gives valuable insights to almost everything that you can think about insurance, investments, or anything of that sort. He is a certified financial planner, chartered trust and state planner. And I feel no webinar or no conference on investments in ISA will ever be complete without his participation. Over to you, Dr. Kumaresh, sir. Please unmute yourself and start. Unmute yourself, sir. Unmute.
Yeah, good evening all. At the outset, I thank everyone, especially our Pankaj sir, for giving me this opportunity. Without much ado, we will move on with our topic. With reference to our wealth, there are two risks in life. Risk of living too long is a risk. For that, we need to plan for retirement pension planning. And risk of living too short is also a risk, because we have financial dependent kids with us. That's why there's a beautiful tool to manage this risk that is known as risk of living too short. A tool is there, that is life insurance. Who needs life insurance? First, we have to, we should not be emotional on insurance and investment aspects, because we generally do this financial mistake. First, we have to divide into two, whether a person is married or unmarried. If a person is unmarried, then is there any financial differences there or not? For example, if a young doctor comes, just joined postgraduate degree, does he need in life insurance? If he has taken education loan, or if the parents depend on their income, because he is unmarried, there is no financial dependent on that PG. So at that time, there is no need to take life insurance at all. If he has not taken life education loan, or if the parents doesn't depend on his stipend, then at that time he doesn't need in life insurance at all. If he is married, then if he gets married to a spouse who can be able to financially independent, that is marrying a doctor or a professional who is capable of earning something, at the time also, there is no financial dependent for the doctor. At the time also, we no need to take life insurance at all. We don't need to take life insurance at all, even at the time also. But if the wife is non-medico, then we should take life insurance. Married, a kid is born means then we should take life insurance because a financial dependent is formed. Then next question comes, how long it is needed? The life insurance needed till there is financial dependence on you. For example, when I planned, I had 11-year-old son and 6-year-old daughter. They become financially, they don't depend on my income after their education got married. If they are got married means they are financially independent, then only we will get them married. So I need to take life insurance for next 20 years. After 20 years, my son, 11-year-old son, might have completed his education and got married. And my daughter might have completed her education and she will be 26 and she might have got married. So I need to take life insurance for next 20 years. This is the dependency. Depending on the financial dependence, we should take life insurance duration. How much sum assured needed? For that, there are two things. Commonly, we do human life analysis. And second one is need-based. When I planned, my annual income was 10 lakh per annum. My financial dependence is there for next 20 years. So I need to take life insurance for 2 crores. Suppose after 10 years, my income has doubled to 20 years, but my financial dependence age is reduced because my son will be by the time 21 and daughter will be 16. So the financial dependent age becomes 10. At the time also, I need to take life insurance for 2 crores. So depending on the human life value, we should find out how much sum assured we need to take. Then what are the types of life insurance policies? Generally, 99.9% of the LIC policies are endowment policies. All G1 policies, 99.9% of the policies are endowment policies. Money back policy is also a type of endowment policy. And second type is unit link insurance policies. And third is term insurance. Only there are 3 types of life insurance policies. First, we will see the endowment policy. I have seen many doctors have taken this endowment policy of 10 lakh sum assured. For easy understanding purposes, I have calculated this. Premium paying per annum is 50,000 per annum. Every year, we are going to pay 50,000 rupees per annum. Premium paying term is 20 years. That is, we are going to pay every year 50,000 for next 20 years. If something happens, we are going to get the sum assured 10 lakhs plus bonus. If nothing happens, after 20 years, we are going to get the double the amount because 50,000 into 20 years, we are going to pay 10 lakhs. If nothing happens, we are going to get 20 lakhs. That is the double the amount. So we think it's a win-win situation. So we definitely go and buy this policy. If you put in financial calculator, 50,000 rupees we are going to pay for next 20 years. The future we are going to get 20 lakhs means what's the percentage? It is only 6%. It is less than the fixed deposit rate. But if you, many have got Jeevan Anand policies. These Jeevan Anand policies, what's the return? Maximum 5% only. That's the amount that we are going to get in all type of endowment policies, which is far less than inflation. The second type of policy is ULIPs. In ULIPs, there are two subtypes. One is our money is invested in share market. Second, invested in bonds. There are two types of ULIPs. Generally, I invested in both. Till 2006, I was financially illiterate. In 2006, I had me and my wife had around 12 endowments and 6 ULIPs at that time. I closed all the policies in 2006, except these two policies that I'm keeping now for study purposes. See, this is again my one ULIP. This is date of commencement of the policy is 2006. Still the policy is in force. How much I have paid? 1 lakh and 1,000. Where it is invested? It is invested in bonds in 2006. Recently, I went there before 2 years and see how much it is. My insurance advisor told me that it gives assured return of 8% because it is invested in bond. So 1 lakh 1,000 invested in 20 years. After 20 years, what's the amount? 85,000 rupees. Generally, these policies sold by our close relatives or by our friends only. All the endowment policies and ULIPs. And he is one of my friends. I asked him, hey, Hare Babre, what is this? I have paid 20 years 1 lakh rupee. Now the value is only 85,000 rupees. How come? You told me that it gives assured return of 8%. He told me, there are charges for insuring, that will be get detected. So I said, okay, then this is another policy. Again, this is mine, taken before 2006. It is taken in 2005. The insurance coverage is 25 lakhs. Annual premium I pay is 25,000 rupees. The policy is still in force. I paid 3 installments. Before 2012, if you pay 3 installments, that's more than enough. Now we have to pay minimum 5 installments. So I have paid 75,000 rupees. So after 10 years, I went and saw it is invested in share market, equities. The amount now is 1,24,000 rupees. It's very good now. But if you put this in financial calculator, 75,000 rupees, 1.25 lakhs in 10 years is how much the percentage? 5%. It's not big. It's not big. So I did postmortem of this policy. What is going wrong? There are this much hidden charges are there. That 40-page, that we will sign this, like this and this side. Both sides we will put so many signatures that is written in small fonts. All these charges are written clearly. We don't read the fine prints. It is clearly written: premium allocation charges, monthly administration charges, fund management charges, switch, redemption, mortality, accidental, critical illness charges. There are so many charges are hidden there. Again, the same policy, when I dissected in 2005, 6, 7, see this much units allotted. If I had 2002 units. In 2016, there are 1,123 units. So if I minus this, because of these 8 charges, it has deducted 878 units. This much they are reducing in units. And see, this is the mortality charge. They are charging 1,664 rupees for insuring me for 2.5 lakhs. And they are not going to give me back that 1,662 rupees if I am alive, because that is mortality charge. For insuring me for 2.5 lakhs, they are charging this amount, 1,662 rupees for 2.5 lakhs. That means 665 rupees per lakh per annum, they are charging me for insuring me for 1 lakh. We are ready to give. We are ready to give. The insurance advisor, he's also my close friend. He told me, see, our fund has performed fantastic. How much? I asked him. 24 rupees NAV has become 120 rupees, 5 times. Our fund has performed well. Yare Babre, fund has performed well. But I have invested 75,000 rupees. My money has not become 5 times. 2.25 it has not become. It is only 1.24. I got 50,000 rupees. Your company has got 1 lakh rupees as charges. So what is the mistake that I have done is, I am mixing insurance with investments. How much I need to insure? 2 crore rupees. If I have to insure for 2 crore rupees, I have to pay 20 lakhs as premium, which I don't have, because my early earning is only 10 lakh per annum. How can I pay 20 lakh per annum premium to insure me for 2 crores? That's not possible with Endowment or ULIPs. For that, also, to separate the insurance with investments, we have got a beautiful tool that is known as term insurance. It is cost effective. In ULIPs, we are going to pay 665 rupees per lakh per annum as a mortality charge. The same thing, if you buy in term insurance, the mortality charge is hardly 100 to 200 rupees per lakh per annum. And this is my term insurance policy. This is my term insurance policy. I need to take policy term for 20 years now. I took 20 years. I'm going to pay premium for 20 years. What is the sum assured? I need to insure myself for 2 crores. I insure for myself for 2 crores. As an anesthetist, I am always in hurry. So chance of getting into accident is more. So I bought another accidental death and disability rider with premiumization option for 2 crores. If I die due to cancer, kidney failure, heart attack, stroke, my family will get 2 crores. If I die due to accident, my family will get 4 crores. What is the premium? 42,000 plus GST, that comes around 48,000 rupees per annum. Per annum means per month, I need to pay 48,000 divided by 12 is 4,000 rupees only. 4,000 rupees per month, peace of mind is guaranteed, as my family is going to get in my absence 2 crores or 4 crores, depending on the death. We are ready to pay 665 rupees per lakh per annum in ULIP, but we don't get this term insurance because we are not going to get money back. But see, for 48,000 rupees divided by 400 lakhs is only 120 rupees per lakh per annum. We are getting it. We are ready to pay 665 rupees per lakh per annum in ULIP, but we don't buy term insurance because it's not going to give back any money. But the mortality charge is only 120 rupees per lakh per annum. So I always go by human life value method for taking your life insurance. And thank you very much for giving me the opportunity. Happy to answer your queries. Thank you, sir.
Okay.
There
Thank
is
you,
one
sir.
question for Dr. Kumar, sir. Kumar, sir. Hello.
Yes.
There is one question
Yes,
for
Ganesh.
Dr. Kumar, sir. What is married women property clause
Yes.
for the insurance
Married,
policy?
yeah, all insurance policies we should take, while taking the policy, we have to ensure that get in Married Women's Party, the MWPA Act. If you get in that, even if you are wiped out or something happens to because of the court litigation, your every assets get attached means, except PPF and those who are under MWPA Act, it will be secured. A famous case is there. Amitabh Bachchan got a maturity of the policy at the time ABC was in a bankrupt. The company knows that it's going to be get matured, and they went to the court to get that money. But what happened? No, it was under MWP Act. So Jaya Bachchan got that money because it could not be attached. That's a famous case. So always ensure that all the life insurance policy should be protected under MWP Act, Married Women's Protection.
Okay. What is the ideal age for to buy the term plan, sir?
Sir, I told you now when to buy. Because a kid is born means we should not take life insurance in the name of kid. Loss of kid is there is emotional loss only. There is no financial loss for the family. We should not take life insurance in the name of non-earning spouse or non-earning kid. We should take life insurance only in the name of breadwinners, earning member of the family. We should not be emotional on insurance and investments. So if you are married to a doctor, at the time also no need to take life insurance at all. But once a kid is born, we should take life insurance according to our human life value.
Excellent, sir. Excellent.
Do needs-based analysis and do that.
Great, sir. I feel when we are talking of insurance, how can we forget our own Family Benevolent Fund of ISA, which is a great boon for all members. I feel this will be the last presentation, and then before going to the question answer session, I feel the aims and objectives of ISA ABF was very clear: to just give an incentive to all the life members of ISA, provide immediate substantial financial aid to the family of the members on the unfortunate demise of our colleague, and the fund is of the doctors, for the doctors, and for the deceased doctors' families. And so it's very important that all of us should be members of this fund, because this is very helpful to our members, especially if unfortunately we have a young anesthesiologist dying. Whenever you go through the history of ISA, how the Family Benevolent Fund came about, Dr. Mangesh Mehta was a young private practitioner in Chiplun, Ratnagiri, and unfortunately very active in the PPF movement of ISA. Unfortunately, he died unexpectedly at the age of 39. And I feel since then, all the seniors in ISA decided that we should definitely do something about this for our members. And that's how the concept of FBF started. And I feel Andhra Pradesh was the first state who had their own FBF functioning, which gradually was taken over by the national ISA. I feel Dr. Chakrara was a big hand in the whole thing. What happens when we die? Unfortunate death, income just stops, but the family expenses continue. And I've seen this in my own city of Nasik, where we had 2 or 3 young anesthesiologists dying, and the family was obviously having financial issues. So I feel it is one of the most important things that ISH has done for the benefit of our members. And so how can we do it? I feel each member contributes just 300 rupees for the demise of every member. And the more the number of members that we have, the more the aid can be given. The last aid that was given to Dr. Thomas Kandan and Dr. Bipin was around 6,24,000. I feel right now the number of members that are there are about 2,600. Of course, in the last 2 months, I came to know that in the last 1 month, about 200 new members have been added. The exact number, I feel the FBF committee will be able to tell us. Regarding eligibility, any life member of ISA is eligible to join the fund. Above 60 are not eligible to join. Couple members should join separately. As I said, we collect 300 rupees from each member and pass it on to the family of our deceased colleagues. The last amount, as I mentioned, was about 6,24,000. Till now, about 111 families of anesthesiologists have benefited by this. And I feel our aim is to have at least 10,000 of us becoming members of FBF. I mean, this is the Dr. Surendra Reddy's wife, who was given the check immediately by Dr. Dr. Parak has been very active in IVF right from day one. So I feel it's very important. I appeal to each one of you to come join feel the satisfaction of helping the families of our colleagues. And because the earlier you join, it is better, because death is certain, but its time is uncertain. By not joining, we are taking the risk for our family's financial security. We are depriving ourselves of the opportunity of helping our colleagues' families. As your age increases, the joining fee also increases. So I feel it is very important. The earlier you join, the paying period is only for about 30 years. And after that, you don't have to, your payments stop, and your family gets all the benefits. Just to about the history I've already mentioned. This 2000 Ahmedabad ABGM under Dr. Radhakrishnan, I feel this program was launched and started. Dr. Chakrarao was the convener and Dr. Tegar was the president. The headquarters at Kakinada initially. In 2014, I feel the ISA National Governing Council decided to take over the ISA FBF under National GC and with an executive body of ISA FBF. This is the managing committee. This is the report of activities up to 30th March that I have. 37 new members joined up to March 23. Number of demises was 109. I feel 2 more have died, expired recently. So about 111 members have benefited. This is the bank balance. The advantages are the premium is very minimum, because what you can get from your own FBF, no insurance company can pay the same amount for the amount of money that you have paid. One other advantage is there is no medical certificate required. Easy and early settlement. The moment the head office is informed, the check is handed over to the relatives. And there is an age limit, as I mentioned. Right now, our website also has started, the isafbf.in, and you can even register online and start payments online from this coming year. Usually, it's in the month of October that we all get our DFC and we all contribute. So I feel it is a sincere request to each and every one of you who is online, offline. Please spread the message to all your friends and anesthesia colleagues. And in the recent past, what we have done at the National Governing Council is for all elections to contest any election, we are trying to make it compulsory that you should be a member of FBF. This is just a way of promoting the membership. I feel that's all I wanted to say. Just a short presentation about it. So I request each one of you to please promulgate the FBF movement in the country. Thank you. We can go to the questions now.
Just one word from me, and Chakrarao.
Yes, sir.
Actually, this was started in 99. This is not an actual insurance. It is only something like a contribution from the members to the deceased family of their colleagues. So now it was started as 300 rupees. Because I am just proposing it since a few years. Nobody is listening to it, and nobody is thinking that it is important. The issue is instead of paying 300 rupees for everybody, if it is a person who died before 40 years or 45 years, he may be paid 500 rupees each, and for other people without any change. For a person like me, about 70 years, I don't think I depend on these things. So it can be like 300 rupees. But for the people who died at the earlier age, it should be given 500 or even 600. That may be a good idea, I'm thinking.
Good suggestion, sir. Maybe in the
Excellent suggestion, sir.
GBM, we can definitely discuss it, sir. Thank you, sir. Thanks a lot for your comment, sir. We can go to the questions now, sir. Dr. Ganesh.
Yeah, sir. One question is for Dr. Anil Sharma, sir. Is it compulsory to buy the car policy from the car seller? What are the advantages and disadvantages?
Yeah, a very, very valid question, sir. So, like I told you, I bought my car last month only. So, I evaluated all on Policy Bazaar and all that. Now, what happens is that they bargain and they will give you some incentive and all that. But if you're buying it from your salesperson or from the showroom, the advantage is that they add on some discounts. So, cumulative premium discount that the other person, suppose non-showroom person wants to give you, if you tell them, they will match the offer. So the paperwork is less, the hassles are less, and the moment your car is out of the showroom, it's insured. You would have seen many videos or memes on Instagram. The moment your car is out of showroom and it meets an accident before any other person can insure that. So that avoids one part of that. But as I told you, if you feel that the showroom person is giving from national insurance on X amount, you tell the other outside person is given X minus 100, they will match the offer. So this is what you leverage or bargain you can do.
One important tip here I would like to suggest is see that the no claim bonus is transferred onto your new car when you are selling your old car and buying a new car. That is one important thing most of us miss.
Yeah.
Very well.
Even the policy can be transferred, I believe. Even the policy can be transferred, I believe.
Even the policy can be transferred. No claim bonus you can continue from your previous policy, and you can show them and you can claim it for the next car. That can be done, sir.
Sir, one more important question is regarding the insurance policy and the changes in the electrical wiring which are done after the car is bought in some local mechanic.
So if there is any
adding some audio video.
No, sir. If there is any modification outside the brand, suppose I bought a Maruti Brezza, I go to a neighborhood shop, and then because of that wiring, some damage happens and all that, and it is proved by the surveyor that it is because of outside, you stand to lose that. So whatever work you want to get it done, it's better ideally to get it done from the workshop of the company if you want to continue claiming the discounts and the premiums on that, sir. That's very clear from the insurance agencies.
So if you have a driver, take some other add-on for drivers.
So sir, there is a that's what I mentioned, sir. This is an IMT, Indian Motor Tariff 28 section. You can when you are renewing your policy, you can tell them liability to driver, please give me this add-on rider. So if you have added on that rider in your insurance policy, then that covers any injury to your driver or because of him. Both sides it's covered. So that is called liability to driver, IMT 28.
Suppose if it is taken by a friend or somebody.
So sir, that again comes to that if he is having a valid driving license, and then he comes under this liability to driver. That doesn't mean only your hired chauffeur or your paid driver. It is any other person who is driving the car with a valid driving license, sir.
Okay. One question for health insurance regarding health insurance. What are the specific points which are to be looked after for senior citizens if they are going to ensure if they are going to purchase the health insurance afresh?
So usually now what has happened is there are very few insurance providers who provide insurance to senior citizens, especially with comorbidities. And usually the premiums are so high that if you calculate on the basis of the premium that they are offering versus the coverage that they are giving, then the ratio is so skewed that most of the time you end up not buying it. But yes, for senior citizens, it is very, very easy to take a health insurance policy, which are a part of group health insurance policies, which are usually given by banks. And in that, frankly, there is nothing to be seen. If they are giving you a policy and they are taking decent amount of premium, you should just take it and reveal all the health problems that you have, and make sure that you know that what are the do's and don'ts of that policy. And most of the time, if they are giving it to the senior citizens, then the cool off period is very long, 48 months or so. So almost 4 years for pre-existing diseases. So again, that makes them very less useful for the problems that the patient is having pre-existingly. But yes, for emergencies and accident benefits, it is again a very good thing. So all the common things remain the same between whether you're buying for yourself or for your senior citizen. Only thing is the options are limited for a senior citizen.
Okay. Sir, there is a question regarding the co-pay. whether the amount is decided by the company or the person who is getting insured?
No, you can decide yourself. Sometimes the company offers you multiple choices, 10,000, 20,000, 30,000, 50,000, 1 lakh, or it can be based on the percentage, 1%, 2%, 3%, but you get an option. From multiple options, you can choose, but you can't decide that I will give 10,340 rupees. So the options are limited, but yes, you get to choose from a variety of options. But once you choose an option,
Okay.
then that option never changes. So it doesn't matter later on after 10 years if you want to go for a non-copay policy, this insurance provider will not accept it. You might have to change the insurance or buy a fresh policy.
Okay. 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 This is one interesting question, that if the same amount is invested into systematic investment plan, right from the young age, is it advisable to do such kind of thing, or it is?
It's very simple. If the person in question is so strong-willed that they will never feel bad to pay 25 lakh rupees, and they will keep that money liquid, and they will tell their family members that this is the money that is parked and this particular instrument, and when something happens, then you are supposed to go through this entire process, and then whatever is the bill, you have to simply go to the hospital and pay it, then it is fine, yes. But as a rule, you should not mix investments and insurances. Insurance insures you, and the premium is so low. We are talking about 30, 40, 50,000 rupees premium per year. We are anyway investing more than that and getting a lot of returns, but this is not for return. This is a financial security that you are getting. You might need it, you might not need it. You might end up having lot more money than what is needed for a hospital payment, and yet you will feel bad in giving that money. So it's just about that. But yes, if somebody is that strong-willed, they can definitely go for it, but they have to earmark that particular investment for the purpose of only paying the hospital bills. And secondly, if they incur an accident in the second year of their investment, then they should not feel bad, because like I met with an accident when I was 32 years old, and my bill from the hospital was 2.5 lakh rupees. But I didn't have that kind of money when I was 32. I just started my practice. So I was very happy that somebody paid the bill.
Dr. Ganesh, sir, I just want to come in on this. My thing is that if you have a health problem in your life, then that is the only problem in your life. All other problems become secondary. We should not forget that. And when it is your turn to pay, don't wait for the returns. So returns are separate. So always go for an insurance instead of SIPs.
Yes, I agree on that.
Yes, sir.
You have to not mix both.
Especially-
Most of them have made the mistake.
Cancer, so this is a recurring disease, or it needs a lot of money. So even 25 lakhs is not enough if you are going to suffer from cancer or in renal failure. You have to go continuous ambulatory dialysis or in dialysis. 25 lakhs, just a fraction of few months wipe out. So always go for Mediclaim policy. Year on year, it will get replenished.
Like what Dr. Kumaresh told us yesterday, is the only thing that is going to make us financially dependent is a health emergency.
Exactly.
Many Indians are just one hospitalization away from going to below poverty line. Many Indians.
Health will, ill health will
Very well
destroy
said,
our
sir.
health.
Very well said, sir. Very well said.
Good statement, sir. Good statement. Actually, I'm going to request all of you to give a small gist of your talks. So then I'll make a write-up and I'll distribute it all over the country. I feel it was a wonderful discussion today. Any more questions?
One more question for Dr. Kumaresh, sir. Dr. Kumaresh, sir. In case of an untimely death of a person who has taken term insurance, how the money which is received, the amount which is received by the nominees, how it should be invested? What is your take on this? Because the person who has taken the term plan is no more, and the people who are nominees, many of them are financially illiterate.
Yes.
So what should be
very
done
good
when
question,
the
sir.
person is alive?
Very good question.
Very good question, sir. Just within 2 minutes, I can share the screen and show what it can be done. The power of 1 crore. the power of 1 crore. This is the most vital thing, because after our death, what's going to happen? So this is the power of 1 crore. Suppose if I get 1 crore rupees, and if you put in equities, we are going to get 12% returns. So, am I audible, sir?
Yes, sir. Perfect.
Okay, sir.
Yes, sir.
And we are going to withdraw 6% is the inflation. 6% is inflation. We are going to withdraw 6%. That is even when I'm alive, we can do that. SWP, systematic withdrawal plan. Now I am 50. I've got 1 crore corpus. If it gives 12% returns, means year end we are going to get 1 crore and 12 lakhs. That means we are going to withdraw 6% or half of the amount. 1 crore, 12% means 1 crore and 12 lakhs. That means we can withdraw every month 1 lakh. But we are not going to do that. We are going to withdraw 0.5%. That is 50,000 rupees withdrawal. 50,000 into 12 is 6 lakhs. That means 1 lakh from World Track 12,000. We are going to withdraw 6 lakh, means year end we are going to have 1 crore and 6 lakhs. And this will be the second year's investment value. And if it gives 12% return, it's going to give this value. But how much we are going to withdraw is 6%. 6% is the inflation, no? Instead of 50,000 next year, we are going to withdraw 53,000. 6% inflation we are going to add. So 53,000 we are going to withdraw from next year, 13th month. 53,000 into 12 is 6 lakhs, that's 6,000. From 1 lakh 18 lakhs and 72,000, we are going to withdraw 6 lakhs and 36,000, means year end we are going to have 1 crore 12 lakh 36,000 rupees. This will be the next year. This is 12% returns. And in the third year, we are not going to withdraw 6%, means it is compounding. So we are not going to withdraw 56,000. We are going to withdraw 56,180. Because inflation also, it's getting compounded. 56,180 into 12 is 6,74,000. This amount minus this is 1 crore 19 lakhs 10,160 rupees. This will be the next year initial thing. Now I am 50-year-old. I have got 1 crore corpus and invested in equities. If it gives 12% return, I can withdraw 0.5%. 50,000 we can withdraw, inflation beaten. Now I am 50. Next 50 years I am going to do that, means after 50 years, what happens now? The corpus is going to become 1 crore might have become 17 crores after withdrawing 50,000 per month, inflation beaten. That is at the age of 100, inflation current value of 50,000 is 8,68,000. We are going to withdraw. In that year, we are going to withdraw 1 crore. At the age of 100, what's my investment amount? 1 crore. And I'm going to withdraw 50,000 inflation beaten perpetually. That is, I am going to die 17.37 crores. I'm going to live rich. I'm going to die rich, leaving 17 crore corpus to my kid at the age of 100. If he is also taking the same amount, withdrawing the same amount for next 50 years, this is going to get compounded. After 50 years, it is 320 crores. Every month, they are going to withdraw 1 crore and 60,000. This is compound interest. This is the power of compounding. This is the power of 1 crore. So even if you have got 6 crores of financial asset in equities, you can easily withdraw 3 lakh rupees per month. No need to go for cases. No need to take up stressful cases, odd-hour cases. You can refuse, bluntly refuse that I will not come for case. I don't have mood to go to cases. You can live peacefully. This is the power of 1 crore. This is the power of compounding. So
Yes.
how much illiquid assets you have got, it doesn't matter. How much financial asset is there in equities, that is important. Please show this Excel sheet to your spouse and explain to them Because after you, if 2 crore is going to come from term insurance policy, they should put in equities, or should not let the equities should be brought back to FDs because they don't understand equities. Fixed deposit, we all know fixed deposits are not investments at all. This get everything which collapsed. They are going to live poor and die poor if they shift the entire amount to fixed deposits. But if you shift into equity mutual funds, then we are going to live rich and die rich. What's your monthly expense? Hardly 1.5 lakhs. If 3 crores is you have got financial asset, then you can live rich and die rich. This is financial independence. You can work on your terms.
Yes, sir.
Thank you, sir. Thank you for
Great,
asking
sir.
this wonderful question.
Excellent
Great, sir.
explanation.
I wish that
Excellent
all of us become financially independent very soon. I welcome Dr. Virendra Sharma. I just saw him now.
I want to
Virendra.
ask one question from Dr. Kumaresh.
Yes,
thank
sir.
you, Dr. Pankaj. I have listened the whole webinar, but I didn't on that video. Sir, most of the anesthesiologists, by the time they settle and they are in a condition to save, they become minimum, you can say 32, 35 or 40 years. Now, from that age, to develop even a corpus of 1 crore, how much you feel they should save, say, suppose at 40, how much they should be saving so that by 60, they at least develop that? Ideally, because if today my expenses are 50,000, it is going to be 1 lakh after 10 years, maybe more 2 lakhs after 20 years. So at 40, I mean, this is very important, sir. I'll tell you, I went through all your calculations. I got it also. To simplify for members, it's very simple. If you don't understand that column, what he's trying to say is 1 crore at 12% is 12 lakhs. You are withdrawing only 6 lakhs. So that 6 lakhs is also adding and it is increasing your corpus, even inflation related. So to make it simple. But sir, you tell me that how much an anesthesiologist need to save at the age of 40. That is the ideal time one will start saving. If somebody is lucky, settle early, and he can save early, that is fine. So that he can develop at least a corpus of 2.33 crores, which you said, which will be required to withdraw a corpus of at least 1 lakh at 60.
Nice question.
Sir, already, if you go to our financial planning for doctors, there, if you earn only 1 lakh, how can we divide that? If you permit me, I'm going to share that calculation.
Sure.
I think many might have remembered this calculator. Current age is 40 and retirement age is 20 years. Current monthly expense is 50,000. That means pre-retirement, we are going to invest in equities 15%. Post-retirement, that means current cost of 50,000 rupees will be 2.38 lakhs because of inflation of 7.5. If you create a corpus of 4.14 crores after 20 years, to create a corpus of 4.14 crores after 20 years, I need to invest 24,000 per month for next 20 years. If it gives 15%, I can reach the corpus of 4.14 crores.
If it's 12%,
yeah.
If it is 12%, then?
No, 15, sir. That we are calculated.
Assume,
yeah.
Suppose assume at 12%.
Yeah. Assumed 12% means I will redo the calculation, post it in our group. But
it will be roughly around 3 CR, maybe.
3 CR. Because it is 4 CR. It is 4 CR. 15% means 4 CR with 24,000 rupees.
So basically, my question was, you have answered well, that it is not very difficult for any of our colleague at even 40 years to save 25,000 rupees.
Yes,
it is
sir.
24 something you said.
Yeah.
So this is the message which everyone should get, that this much minimum, if you invest for 20 years, your corpus will be sufficient for retirement.
Yes,
that
sir.
is what I gained from your last slide, which you.
Yes, sir. This is a slide. If I had only 1 lakh, the retirement, if you keep aside 24, you can retire at the age of 60. Thank you, sir.
Thank you. Thank you.
And if somebody tops it up by say 5 to 10% every year, the corpus will be still more, I believe.
Amazing, sir. Power of compounding starts
Yes.
after 10 years. Amazing. You see in our calculator now, it is 6% compounding in 100 years, 1 crore is going to become 320 crores. Because we are going to withdraw
Yes.
6%, no? This is the power of compounding.
Yeah. One last question for Dr. Badresh sir. If we
Badresh, eh?
sir.
Dr.
Badresh, sir.
Badresh? I feel he is
Another
lost.
question for him. Flight and loss of the connecting flight. What would be done actually? Can anyone of the faculty members throw light on that? If we are traveling abroad, if we miss one flight and flight, how to claim and what would be done actually? Because there is total disruption of the tour. If we miss the connecting flight.
Badresh?
Sorry, sir. Please, I am driving my car. But no problem. Please repeat the question. Sorry. Hello?
Question
The
was,
thing is that if we are traveling abroad and
Okay.
if we miss one flight and if we miss my initial flight, if I miss the connecting flight,
Yes, sir.
then my entire itinerary goes tipsy-turvy.
Yes.
In that case, what needs to be done and how can the insurance be claimed at least?
First of all, we have to take the certificate from the that airlines that you have missed flight because of this timing problem. Suppose first flight is delayed and you are not able to catch the another flight, then we have to certificate from the first flight, and that every airlines have a one customer or counter at the airport. Then they will issue the certificate that you reach at that airport delayed because of late because of this flight schedule change. With that certificate, depending upon your insurance amount, they are giving the compensation. Then next flight you have to take at your own. You have to manage at your own. But after finishing your all traveling, you can claim and they will easily pay all amount which you have lost and which is covered as per your insurance amount. That is very easy process. Yes, sir.
No, can we get a reimbursement for the fresh itinerary, that is fresh travel?
They depend upon your insurance you have taken. In lower category, suppose $50,000, they are giving fixed amount. When you are taking the higher category, 2 lakh, 3 lakhs, then they will give your all other losses also. That when you have booked immediately in emergency new flight, then they will give the charges of that new flight also.
Okay.
Right, sir.
So the entire trip cannot be rescheduled and refinanced by the insurance company, travel insurance company?
No, sir. No.
Okay.
Right, sir. Thank you.
Thank you, sir. I think that sums up most of the questions. Over to you, Pankaj Gupta, sir.
Yeah, Dr. Rakesh would like to give his concluding remarks. Dr. Rakesh Garg.
Thank you, sir. I think quite an interesting discussion, and all experts have put it their points. I'm sure that we will have a brief summary. Pankaj sir will take it forward so that we can take it. And I just suggested if we can have templates for comparisons, it will be good. Dr. Kumresh has also mentioned tabular format. So if he allows to be used by people, it can be shared to all the ISA members so that it becomes a ready recognize for them to understand as and when required. Obviously, I fully understand that we grow up in anesthesia and we learn every time. And same would be for various insurance policies also. We need to spend some time with them to understand them. So this is not a one-day job to understand and clarify everything. I'm sure all the experts have spent a lot of time for these aspects, and I'm sure they will be helping our ISA members also in future for specific queries. So thank you so much, and back to Dr. Pankaj sir for final remarks.
Thank you, Dr. Rakesh. I really thank all these speakers for a wonderful discussion, and I'm sure does anyone in the audience want to speak anything? You can unmute yourself and speak. Even in the audience, you can raise your hands if you want. Dr. Chauba Singh, I can
I
see.
guess Dr. Suman Kaushik madam has got a lot of questions. Dr. Suman Kaushik madam has got many questions.
You can unmute yourself, madam. We have finished
Dr.
well
Suman
in time.
Kaushik madam.
Yes, sir. Dr. Suman
Yeah,
Kaushik
you
speaking,
had some
sir.
questions.
Sir,
Yeah,
I
please,
had a
go ahead.
question that at what age the term plan is necessary? Is it good for taking at the age of 50 years? Term plan, sir?
Yes, madam. Why not? Because your son is doing only final year.
Yes, sir.
That is 24 years. Next 6 years till he is financially dependent, you can take. If after the completion of PG, he's not dependent on you.
Yes, sir. I just want that only, sir. So to secure his future.
Anyway,
But
after
you have-
completing MBBS, he's going to be financially independent.
Yeah, later on, sir. But abhi to he's going to do PG also and internship also.
Yeah, next
So
3 years,
that's
4
why.
years is more than enough, madam. If
Okay.
you
Is he the
don't
only
have
dependent
financial asset, if you have got illiquid assets, then it's a must to take. You may be having 100 crores of real estate, but it may not give you every month 1 lakh or 2 month every month, because we can't send every square feet or every cent every month.
Yeah.
So that's why we need to have a financial asset in place.
Okay, sir. Thank you so much, sir.
Madam, are you the only, is he the only dependent person?
Yeah, he is the only son, sir. And
he's the only
my
dependent
husband is
person.
yeah.
If
Okay.
you have got adequate corpus, then you don't need to take life insurance at all, madam.
Okay, sir. Okay, sir.
Dr. Rajesh Rao, Dr. Nishant
Thank
Sai,
you,
any
sir.
comments? I can see you online. A quick comment if you are interested in giving your comments.
Yeah, Dr. Rajesh had some questions regarding the policy, indemnity
Exactly, that's
policy.
why.
He had asked the question actually,
Yeah.
but Dr. Prasanthi madam had actually explained properly.
Right.
If he still has any doubts, then
Yeah.
I guess he's
Anyone
not
else?
on the line.
If no one has raised the hand, then should we
No,
call
sir,
it a day?
no doubt, sir. I think most of the queries have been answered. I've been glued to the screen right from the word go.
Oh.
And I've not left any single minute also. It was very, very interesting and very knowledgeable.
I think we can call it a day, I think.
Yeah. Thank you, Dr. Nishant. Anyone else? Dr. Rajesh Rao, someone would like to make a comment?
Thank you.
Okay. So I feel then we can call it a day. Dr. Ravindra Bhaskar, I'm
Yes,
just
sir.
seeing online just now. Dr. Ravindra Bhaskar, our GC member from Central.
Yes, sir. Good evening to all.
Good evening, sir.
I gave a very informative, very elaborated discussion on all type of incidents and all. There is very good CME today for it. Thank you all.
Dr. Madhusudan Rao, Dr. Chauba Singh is also there. Chauba Singh, are you around? Any last comments to finish off?
Yeah, it was a very good session. Very well moderated by Ganesh Tendulkar. Good topics. I think we should have it, keep on having it every 3 months.
Dr. Rao, you had some queries regarding the indemnity policy, I believe.
Indemnity policy, there are too many policies in the market now. Today itself, I was in conversation with my provider. Actually, I had paid for 2 years. And my policy renewal letter I not received. I got a notice for renewal. So I'm clarifying it with them because 1 year ago I had paid for 2 years, which was supposed to get expired next September. So now I have got a renewal notice from the company, the insurance company, saying that fresh premium is due. I was just in talk with the Cover You people regarding the same.
Okay.
Any other comments? Dr. Chauba Singh?
Yeah. Good evening, sir. Very informative and eye-opening for me. Some of the insurance thing we accident covers. I'm hearing maybe first time. So it's very informative. Thank you all. It's very interesting.
Thank you, Dr. Chauba. I feel we can call it a day, Dr. Ganesh Tendulkar.
Yes, sir.
Yeah,
Yes,
thank you,
sir.
thank you,
Sir,
thank you, thank you, thank you,
Dr.
audience.
Dr.
Care
Pankaj
about
sir, Dr. Pankaj sir, one last thing that I'm really thankful to ISA for coming up with all these innovative things, and they are going to really benefit. And any day, I'm more than happy to contribute. You are like a Bhishma Pitama to me, to be very honest, a very personal relationship with you. Very happy to see Dr. Ganesh sir also and my co-speakers. It was an amazing session, and thank you very much, sir.
Thank you,
Most
Dr.
welcome,
Anil,
sir.
for
Most
always
welcome.
being there with us.
Hello, sir. Good evening.
Good evening.
Myself, Dr. Preeti from Delhi.
Oh, hello.
Oh, yes,
Hello,
madam.
madam.
Please.
Sir, it was such a wonderful lecture. This is the first time actually I was hearing this, and it was amazing. I don't have any question to ask, but I must go through it again and write it down on a paper. I wish I can have it again.
Definitely, madam.
We would certainly have, sir,
Right.
madam. We would certainly have
Actually,
more programs.
something different.
Madam,
Sir,
on,
my-
on behalf of PPF, Dr. Virendra Sharma and me, we keep talking that we have had enough of academic talks. We are trying
Yeah,
to do things which are more important in our life. We have to improve our lifestyle and improve our knowledge about other things like investments, financial independence. I mean, we are such fantastic people in the country. So we just trying to earmark and get people like Dr. Kumaresh is such a big boon for all of us.
Yes.
So, we are coming together trying to discuss more and more things which are useful as in life, not just academics.
As he said, at the age of 60 years, why should you take stressful cases? Why?
Exactly.
I'm not feeling like coming. Go ahead. So we should be that independent. That should be there, na? And we as girls, practitioners, we generally are, not much bothered. We just depend upon our husband. Okay, he's doing. But this is actually very good. I think the very, very good lecture.
Thank you.
Thanks a
Thank you,
lot.
madam.
Thanks.
Thank you. Dr. Kumaresh
Most
wants to say
welcome,
something.
Sir, in orthopedic conference, I was asked to give a lecture for 1 hour in Hall A at 11 a.m.
Oh.
All will become, because they have got money, they want to know more about how to invest money. But in our conferences, they are putting in Hall H, IJK.
I know.
I don't know where the hall is sometimes.
Virendra and me have been fighting for this. We have been telling us we want PPF sessions in Hall A, but unfortunately we have not been getting it. So let us see. Things will change hopefully by and by.
Dr. Kumaresh, one second. Dr. Kumaresh, let me tell you one thing. See, it all depends on how much awareness we are able to create. Now, previously we were fighting for having a PPF session. Now, see, you will be amazed. In last 2 months, a request for 3 financial sessions. One I could be a part of in Delhi. Another one I am going to Daman where all the experts are coming. And third one could not happen because some people are not coming out to join. That was in Lucknow during ICACOM. So what you are saying that Hall H and J time will come when we will be given Hall A for financial literacy. I'm sure.
In November, sir.
Nishant Sai is the main person, scientific secretary.
Not main, but yes, Hall A is there, sir.
Yeah, actually, Patna conference should have a big session of Dr. Kumaresh, sir. At least 45 minutes. That will be enlightening for everyone.
Yeah. Very, very enlightening, sir. Sir, today my wife is a radiologist in a different city. I forced her to join. She was there throughout.
Oh, very nice. Please give her feedback, sir.
Definitely.
Pankaj ji,
yes,
I want to share one experience. I want 1 to 2 minutes for car accident, car insurance.
Boliye.
Just I remember, sir. 3 to 4 years back, I took the policy from Exigo. Right?
Right, sir.
Echo, sorry, not Exigo, Echo. And
Echo.
30 to 40% less than that other company's premium. And I tried and I switched over to the Echo. Now, what happened after taking my policy after 4 to 5 months? On one Saturday morning, I got the accident and minimum damage to my car. So
Yes, sir.
as routinely we are afraid from the online policies, but this experience is totally different. Saturday afternoon, I informed the company that this thing happened, and he said that our person will come Sunday morning, early morning. I said, okay.
Sir.
Sunday early morning before I wake up, the person is arrived and he called me and I attended him and he took the photos and video of my car. That was Sunday morning. Sunday 5 p.m. I got the call, and they have two type of compensation. They either giving lump sum amount, or they take our car and repair in their depots or their service center. So he offered me handsome amount. At that time, damage was little bit, and he offered me 20,000 rupees. He said, either you take this 20,000 rupees or give the car for repairing. So I took 20,000 rupees because damage was almost same. But what happened? Sunday morning he attended. Sunday 5 p.m. he called me that 20,000 rupees is passed. I said, okay. Then I WhatsApp the check at 6 p.m. and Sunday 8 p.m. they give me the amount. This is such a miracle in India that on Sunday, online company giving this payment, and if you give the car for repairing, they suppose they say that they will take 5 days. Then after 5 days, they are giving 500 rupees per day for cab charges. This is such a wonderful thing. So I think that I have to share this all of you. Premium is less and very good service in Echo. This is my personal experience.
Okay,
Otherwise,
okay.
payment on Sunday.
There is one query by Dr. Katoj sir. If we had time regarding health insurance, can we should we opt for a online policy or in-person policy? What is the
Here
experience
I'll
of the
have a
house?
difference of opinion from a lot of people, especially Kumaresh sir. I am more pro towards the online policies because everything is in our hand. The disclosures are in our hand. And so I take all my policies online. Nothing is through an agent because I have had very bad experiences. My dad, he had this agent who gave him policies for all four of us for the entire life, all LICs, terms, all health. And when the time came for his first one and only claim, then he simply said, I am somebody who sells the policy. You have to contact the customer care. This is the number. Just register your claim and then they will do the rest. So I felt, what is the point of then having that person when in time he is going to just tell me to dial 1800? Online policy, usually they give 2.5% discount on premiums as well. Plus, when it is online, you are more aware of the entire process. So the agent cannot mislead you, misguide you, or misrepresent you in terms of what the information you are putting. Like I hike. So when I took a term insurance, they asked me if you are involved in any life-threatening sports. So I looked at the drop-down list and hiking was one of them. So I clicked hiking. So then they said, okay, what kind of hiking? So they took the detail. Then they gave me a printed format in which I had to fill the kind of hiking I do and then submit it, which becomes their enclosure in case the accident happens while hiking, whether it will be covered or not covered, or it would be considered as a dangerous sport. All of these things, I'm sure nobody really pays attention to, like hiking kaun karta hai, hiking karke nahi kiya. But suppose you go for it and something happens later on, somebody is taking the claim, it might make a difference. I don't know whether it will make a difference, but I am more pro towards online because everything is in front of you. Whatever information you put, you remember it very vividly. And also something that I want to tell that insurance should always be taken by the person who is going to take the claim. So whether it is health or it is life, it should be your spouse who should actually take the insurance for you. All my insurances are taken by my wife. All the details she knows, she has to break her head. Sometimes she yells at me. She's like, what the hell are you trying to make me do? But I still make her sit and do it. Sometimes it takes 20 days. Sometimes it takes 30 days. Sometimes I surrender the policy after she has tried everything and she could not get through the underwriting team. I surrender it in the free look period. And I say, okay, we'll start the process again. Because the person who is going to take the claim is the person who needs to understand the entire process. So when it is happening online, then all the details are in front of you. But when it happens offline, somebody else is filling up the form. So you are kind of in the dark unless and until you have somebody who is very trustworthy and who is somebody with you for a long time. But for most of us, we are in our generation, most of the things are done online. So I think we prefer doing things more online.
So at least those who are in 30 to 45 age group, I think they should be doing what Dr. Anshu is doing.
May I ask one question, sir, regarding health insurance? Myself,
yes.
Dr. Patil.
Yes, sir.
Please.
Sir, now the concept of super top-up has been heard. When we want to increase the health insurance amount above, say, 25 lakhs to 1 crore. So many people are suggesting that you should take a super top-up. So initially your 25 lakhs will be used, and if your expenditure exceed above that, then we can claim for the super top-up, which will be available in less premium, but we can increase our sub insurance amount. Can you show some idea about super top-up or?
Yes, sir. We have discussed it at length. If you have an existing policy and you don't want to change it, then the super top-up is the best way of approaching it. Only thing, suggestion is to always take it from the same company, which is your base policy, so that that transition is easy. But even if you take it from some other company, usually they do not have any problem. It's just you need to intimate both the companies at the time of claim that I have initiated a claim and I'm admitted in the hospital and now might need you. So then they coordinate with the hospital and another insurance company, and the moment the primary insurance exhausts, the top-up kicks in. Sometimes there is a jurisdictional problem. Suppose you are in an ICU for a long period of time, your 25 lakh is exhausting, you start getting messages, but the other insurance company is not really very keen or has delayed it for 2 days. So there is a possibility you might have to in between give money, which again gets reimbursed by either insurance company or the hospital. But super top up is now the easiest way to increase your coverage. And yes, your coverage should be, in today's time, I feel the coverage should be anywhere above 50 lakh rupees, minimum 50 lakh, preferably more than 50 lakh is what I would suggest.
Right, sir. Thank you, sir.
So let's wind up now. I think we've had a great discussion.
Yes, sir.
Thank you everyone. Thank you, Ganesh.
Yes.
Thank you, Kumaresh sir.
Thank you, sir.
Thank you, Anshul.
Thank you, sir.
Most
Wonderful
welcome, sir.
discussion, Ala madam.
Thank you, everybody. Thank you.
And we will be
Thank
in
you,
touch.
sir. Thank you very much, sir.
Let's see, we may have something in October now and again in November. Every month, one day we will definitely keep for this sort of discussions. Thank you all the audience for waiting
Yes,
right
sir.
till the end. We had about
Thank you, sir.
140 odd numbers, I feel. So that's pretty decent, good enough.
Thank you, sir.
Yes, sir.
Thank you everyone. We'll wind up. Good night, everyone.
Good night, sir.
Thank you,
Good
sir.
night. Good night.
Good night. Good night.
Night,
Good night.
everyone.
Good night, sir. Good night.
Good night, sir.